The last section, chapter 13, is dealing with how do we go through and pay and record those withholding and payroll taxes that we have. Employers must pay to the federal, state, and local governments all payroll taxes withheld from the employee earnings, as well as the employer payroll taxes. The payment of payroll taxes to the government is referred to as a deposit. Two amounts determine how often deposits are made to the federal government. The amount of payroll taxes collected during the current deposit period, and the second one is the amount of payroll taxes owed during the prior 12-month pay period. The 12-month period that ends on June 30th of the prior year that is used to determine is how frequently a business must pay payroll taxes, and that is called the look-back period. The IRS provides businesses with the following flowchart to assist them in determining when to make tax deposits. They will ask this question: yes, you're going to be depositing those taxes by the end of the month. No, you're going to ask the next question: do you have accumulated tax liability of $100,000 or more and within a day's deposit period? Yes, deposits are deposit taxes by the next banking period. No, did you fall under the $100,000 rule anytime during this year or last year? Yes, you are a semi-weekly scheduled depositor, and those deposited taxes from the pay periods are on Wednesday, Thursday, Friday by the following Wednesday, Saturday, Sunday, Monday, and Tuesday by the following Friday. If you said no to this question, then you're going to go through and say, are the total taxes for the look-back period more than $500,000? Yes, answer that one. No, you are a monthly scheduled depositor. A deposit taxes by the month of the 15th following the month. So you really have to take a look at and answer a lot of questions about how many employees. Okay, so basically when we take a look at the more employees you have, you're going to probably go through and have your payroll taxes paid more often. New employers are a monthly scheduled depositor for the first calendar year of business. After a look-back period is established, the business must evaluate whether the change in its deposit period is required. 3 Green is classified as a monthly depositor, so every month the payroll taxes must be paid by the 15th day of the following month. The payment includes all federal, Social Security, and Medicare taxes that 3 Green withheld from employee salaries. 3 Green must also pay the employer's share of the Social Security and Medicare taxes. Remember, employee payroll taxes are paid by employees through payroll withholdings. Employers must pay their own payroll taxes. Federal tax deposits must be paid using electronic funds transfer. Businesses are encouraged to make deposits using the Electronic Federal Tax Payment System, EFTPS, either by computer or telephone. The business can have the deposit transferred directly from its bank account to the government. A business may choose to have a tax professional, financial institution, or other third party deposit its taxes electronically. 3 Green prepares a check to its bank for the amount for December of $3,494. The bank uses its electronic funds transfer system to deposit the taxes for 3 Green. Remember, tax rules change periodically. Always check the most current tax information before calculating any tax amount and the tax deposit requirement. On January 15th, the balance of each liability account is a result of payroll taxes recorded in December. The transactions and employee income tax payable are the amounts withheld on December 15th and December 31st. Payrolls. There are 2 transactions recorded in Social Security tax payable and Medicare tax payable for each payroll. The first transaction is the amount withheld from the December 15th payroll recorded on a cash payments journal. The second one on December 15th is the transaction represents the employer's share of payroll taxes recorded on the general journal. The 2 December 31st transactions represent 1 employee and 1 employer. So when we take a look at what needs to be paid here, employee federal income tax, again, is going to be your federal income tax. Social Security, we have employee, employer, employee, employer. Medicare, same thing. So to journalize this transaction, we're going to write the date of the 15th in the date column. Then we're going to go ahead and write the titles of the 3 account columns. Then we'll write our check number, 748, in our check column. Step number 4 is going to be to write our 3 debit amounts, $998, $2,223.06, and $473.14 in the general debit columns. Our last step is to write one amount for cash, which is going to be $3,494.20. FUTA, federal unemployment tax, is going to be paid by the end of the month following each quarter. So there are 4 quarters in the month, and by the end of the next month it has to be paid if the liability is more than $500. However, all employment tax liabilities outstanding at the end of the calendar year must be paid. FUTA tax is paid to the federal government using electronic funds transfer or the electronic federal tax payment system. The deposit for FUTA tax is similar to the deposit required for income, Social Security, and Medicare tax. Don't forget, the IRS service encourages all business to deposit federal taxes using the electronic federal tax payment system. The total of FUTA taxes paid during a current calendar year is reported on Form 940. 3 Green's FUTA tax liability for the entire year was $297.02. Therefore, 3 Green was not required to make any quarterly tax deposits. For each payroll period, a credit entry was recorded in unemployment tax payable federal. The T account is going to show the entries for the December pay periods. The account balance on December 31st, $297.02 is the total FUTA tax liability for the entire year. The balance of the liability account is reduced to a 0 by this transaction. So to journalize this, we're going to put in our date in the date column, the title of the account, Unemployment Tax Payable Federal. We're going to write in our check number of 749. We're going to put in our debit amount of $297.02, and then we'll write in our cash, $297.02. Next, we'll take a look at paying our state unemployment tax. Our T account is going to show unemployment tax payable state for 2 December pay periods. The balance of the liability account is reduced to a 0 by this transaction. State requirements for reporting and paying SUTA taxes vary. Each employers are required to pay the SUTA tax during the month following each calendar quarter. The steps for recording the transaction are the same as what we did for FUTA. Date, our account title, in this case it's going to be unemployment tax payable state. Check number, the amount that is going to get a balance of our account to 0, and then cash credit. So we took a look at paying or recording transactions where we're paying our liabilities for having employees. I look forward to seeing you all online when we're going to be doing our next virtual learning.